Hi guys, welcome back to the channel. If you are a returning subscriber, welcome back. If you are new and we're just passing by, please subscribe so that I get notified of future videos. Like this video, that's the only thing I'll ever ask you to do. And you already know, if you're looking for stuff, Forex robots, Forex systems, indicators, and strategies, there are two links in the description box below. Go to those two blogs and see if you cannot find what you're looking for. Then you can always come back and leave a request in the comment section below. Okay, so today we are talking gold, XAU USD or gold. Actually, 2020 was my year of trading gold a lot. I previously traded gold, but not as much as I did in 2020. I think it was also partly because of the global pandemic and things that were happening. So people were rushing to gold, and there was a lot of action on gold. I know some people don't like to trade gold, but anyway, I think once you get the hang of it, it's one of the simplest pairs to trade and make money. So this video is just basically about some of the tips that I'll share with you about trading gold. Obviously, the first one will be you need to check for what do they call it, negative correlation. The first things is negative correlation that gold has with the US dollar. Generally speaking, not all the time. That's why I'm saying generally speaking, when the US dollar is strong, gold is weak. So when people are buying the US dollar, then you know you should be looking for sales on the gold. If the dollar is weak, then definitely you need to be looking for buys on gold. And one way to do that, which I kind of did every morning, was just to look at the US dollar index, USDXY. I think USDXY. It depends with what your broker calls the US dollar index. It basically tracks the strength of the US dollar against a basket of currencies. So if you see that the USDXY is bearish, then basically gold, Euro USD, GBP USD, you are looking for buying opportunities and stuff like that. So that'll be the first tip. Second tip will be trade with the New York session in mind. Of course, the forex markets are 24 hours a day, 5 days a week, and you can basically trade gold 24 hours. But I observed that typically the New York session has more liquidity when it comes to trading gold. You can have good liquidity in the London session, but New York session, things really pick up. There is high liquidity and low volatility, but yeah, so you basically want to set your mind towards New York session, but you can definitely start on the London session. Then what I also observed with gold is don't be complicated. Don't try to be complicated. Trading gold can be as simply as targeting the previous highs and the previous lows. Just that. You don't have to be complicated and find all the other indicators, convergences and things like that. Basically, just target the lows and the previous highs and you'll be fine. Also consider geopolitical implications. Gold also moves on global news. For example, the pandemic, or if there is a war, if there is a trade war, if there is things like that. especially affecting the US dollar and currencies such as the Japanese yen or the euro and things like that. So just pay attention to some of those global events that affect some of the major markets, the major countries that will have an impact on gold prices. Then another thing that I also observed is just to track industrial and commercial demand for gold. Basically, increased market demand for gold can affect prices due to, gold is a commodity and there's a fixed global supply of the thing. You cannot just manufacture gold out of thin air. So when industry and other commercial enterprises are looking for more gold, then it means the prices are going to go high, the laws and supply and demand. And gold, you can't just make it. So it means the more the demand there is for this limited supply of gold, the higher the prices will go. If there's no demand, definitely the prices will start falling. So yeah, then another thing to do is also to just keep your ear out for central banks. Sometimes you hear that the central banks are buying a lot of gold, because they do. For example, in China and Russia, they made headlines for buying significant amounts of gold as a hedge against currencies, their economies, and things like that. So these countries, China and Russia, are basically concerned about the future of the US dollar, the euro, and other currencies. So they basically were buying large amounts of gold just to hedge against some of the things that might affect the dollar and the euro and things like that, where they probably have other investments. So yeah, you just keep an ear out for stuff, for news like that. If you hear central banks are buying gold, that definitely will start pushing prices up, because if central banks are buying gold, it means governments are thinking that the US dollar and the yen and the euro are losing value, or they are going to drop. So that's why they are buying gold. So you need to buy gold as prices go up. So that's one other thing to track. Then you also need to track interest rates. Gold has a well-documented correlation with real interest rates, with prices rising as interest rates decline. Basically, gold prices increase when you see interest rates declining, and gold prices actually drop when you see interest rates rising. So those are some of the things that you just need to look into. Then another simple way to determine your entry on gold is just to target your moving average crossovers. I already said you don't need to be a genius to trade gold, really. You might just have a 20 moving average, a moving average 20 and a 50 moving average 20, and when the two cross, and probably you are on an hourly chart, or you are on a 4-hourly chart, and or 2-hourly chart, or whatever chart you are on, especially the higher time frames. When those two moving averages cross, definitely you are in for a good trend. That's generally what happens with gold. Then one last thing is just to pay attention to news and statistics on gold production. Like we said, gold is a fixed amount commodity. there is only so much gold on earth. You cannot have like an infinity amount of it, and most of it, because gold has been mined over the centuries since men learned to mine for precious metals. Most of it is already in supply. That's the thing about gold. Most of the reserves of the world, the known reserves of the world, have already been mined. Of course, there are other difficult to mine reserves, but most of it has already been mined. So if you're just paying attention to gold production stats, you can actually tell where gold prices are going to go. Definitely, if there is low production, then it means the amount of gold in circulation is going to be limited, and it's going to gather value. Then prices are going to go up. If the miners are overproducing the gold, definitely then prices will go down because there's too much of it in circulation. But I think over the centuries the price of gold has tended to just go up because more and more of it has been mined, and there is less and less of it still to mine. Maybe when start going into space and mining asteroids and stuff like that, maybe we can find more gold. But as of now, the gold that's left on earth is now difficult to get to. So just watch the production statistics, and you get a picture of whether you should be buying or selling gold. So I hope with these tips you can actually make money trading gold. It's one of the simplest pairs to trade, and this year 2020 I traded a lot of it. I think I've never traded gold so much, and I discovered how so simple it is. Hopefully you can too. Subscribe if you are not yet subscribed, like the video. Until next time, bye.